because we're 1 month away from the beginning. The story of the Bitcoin era, the blockchain era starts January 1st, 2024. And 54, 68, 82, 96, 2010, 2024. The 14-year cycle starts January 1st. And then we run 4 years where it's awesome. And then we have a bust. And that bust kills off a whole bunch of also-rans, right? It kills off the pets.com and it kills off the web vans to then be rebirthed for the next leg up, which is the killer leg up. That's when the fun starts.
Mark Yusko, a well-known hedge fund manager, continues to express a high level of optimism for the upcoming cryptocurrency bull market in 2024 and 2025. Over the past few months, Yusko has made numerous bullish predictions, particularly for Bitcoin, the world's largest cryptocurrency by market cap. As the founder and managing director of Morgan Creek Capital, Yusko believes that the current cycle extends beyond the typical 4-year cycle for Bitcoin and other cryptocurrencies. Instead, he sees it as the commencement of a broader technological evolution encompassing artificial intelligence, blockchain, cloud computing, and big data. Yusko anticipates significant developments in these technologies over the next 4 years, starting in January 2024. He predicts a substantial increase in prices and value within the blockchain industry. For example, in 2024, Yusko foresees a surge in institutional investors entering the market, beginning with the approval of a spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission on January 8, 2024. Additionally, he expects new wealthy investors to allocate a portion of their portfolios, totaling at least $30 billion in new investment capital, to Bitcoin and other cryptocurrencies. In a recent interview with Blockworks Macro, Yusko expands on these predictions and shares his insights on the evolving landscape of the cryptocurrency market.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Is this ETF, if we were to get it, a buy the rumor, sell the news type event?
Nope. Dan Moorhead put out the paper, buy the rumor, buy the news. No, wait. The money has not even started to come. It's different, right? It's different than the futures ETF, which that was buy the rumor, sell the news, because futures, they can get naked short on the other side, which is why they approved the futures ETF in the first place. So the banks could go naked short and push the price down so they could accumulate at a lower price. That's been going on for years. In this world, you don't get to make paper shares. You got to buy the Bitcoin. And so the amount of Bitcoin that's going to get bought as the money starts to flow into this, and go back and look at what happened with GBTC. When GBTC started to take money in, we went from 10 grand to 60 grand in like 11 and a half seconds. I mean, it wasn't 11 and a half seconds, but it was pretty, just go back and look at that first run up. And then Elon did his tweet and we went down in 50%. We went down 50% on a freaking tweet. And then we went all the way back to 69 because it was because fair value was 30 and we got to, 2 plus times fair value. And then we had the bear market. So is this going to run, from 30 to 180? Might. In fact, it might run more because the amount of money that's going to go into this ETF, big, really big. I mean, it's just big. It's just big. And there's no other place it can go but spot Bitcoin. It can't buy anything else. It has to buy the actual coins. Right. And that's different. And the problem is there aren't that many to buy. I believe it's possible that Bitcoin is the global settlement layer for all assets. Certainly possible. And we're like, no, it's ETH. ETH has more activity. I'm like, no. The activity of trading the token is not what I'm talking about. I'm talking about final settlement of where do you want the ownership record of your home or your car or your business. I think you want it on the safest, most secure, biggest network. What I think is interesting to your point on the application layer. So in the internet, all of the wealth is in the application layer. You can't own TCP/IP. You can't own HTTPS. You can't own SMTP. Just none of it is at the protocol layer. The companies that built those protocols, most of them government agencies, but there were some private companies that tried to commercialize the tech. Nope. All of the value in the application layer. So far in Web3, or third generation internet, whatever you want to call it, 85-ish% of the value is in the protocols because you can actually own them. But people say, well, but am I really owning them or am I just trading shitcoins? Well, yeah, a bunch of them are utility tokens and you don't really own anything. Okay. But there are some real ownership. And I would put, Bitcoin and Ethereum and Solana and a handful of others. They'll be classified as commodities. I think the good ones. But at the end of the day, I think Bitcoin is the true commodity, like gold. Gold is both a commodity and a currency. It has its commodity uses and it has its money uses. It's the base layer of all money, right? Every central bank owns it. They build the money on top of it with debt. Great. I think Bitcoin replaces that.
Mark Yusko is among those with high expectations for Bitcoin and Bitcoin exchange-traded funds in 2024. The New York City-based asset manager, VanEck, has released its projections for Bitcoin and crypto in 2024. Analysts at the firm anticipate a substantial influx of $2.4 billion in Bitcoin ETFs. This estimate is derived by examining the proportional ratios of the SBDR Gold Shares ETF and adjusting it to 2023. Notably, the gold ETF experienced approximately $1 billion in inflows within the first few days of its launch. Applying these observed figures to the Bitcoin spot market, analysts project inflows of $2.4 billion in the first quarter of 2024. Beyond the initial 3 months, a medium-term estimate suggests $40 billion in inflows over the first 2 years of trading. In contrast, Yusko's predictions range from $30 to $300 billion in inflows for 2024 following ETF approval. Share your thoughts on these estimates as we delve into more excerpts from Yusko's interview. In this segment, he explores his perspectives on the current state of the United States economy and the impact of prevailing conditions on low-income earners.
The only reason stocks look like they go up is because of what gold does. We're pricing those stocks in the toilet paper.
And you know what?
Which went from $1 in 1913. Okay, it's from 1776 to 1913. $1. Just remember, we took from the Dutch, the Rijksdollar, because they invented the first central bank. The dollar was 1776 to 1913 worth $1. It had two fluctuations around the wars when we made other things like Confederate dollars and all that. But the bottom line is the dollar is worth $1. 1913 to today, it's lost 97+% of its purchasing power. So when you price equities in dollars, they look like they go up. If you priced the S&P in gold, not so much. So that's the dirty little secret. In fact, stocks, and this is just a short period of time, stocks today priced in gold are the exact same price they were in 1997. Okay, and if you take it all the way back to when when gold was like $30 and they fixed it, it's worse. And so what happens is this devaluation of the currency creates money illusion. You feel like you're richer. Your house goes up and your stocks go up. But remember, that only applies to the people at the tippy top and the all-seeing eye. The people at the bottom don't own stocks. They don't own houses. They have a fixed income in terms of minimum wage jobs, and literally they subsist on government handouts. Liz Ann Saunders, I think, but she's from Schwab. She had a great chart this morning that showed that the percent of personal income from government subsidies is back down to pre-COVID levels. So we had that massive spike where everybody said, "Oh, everybody's income went up." I'm like, are you joking? They sent you money. That's not income. That's a windfall. That's not income. That's not coming again. And it had this big spike up, and it's just been deteriorated, and it's now back to below where it was. There you go. There's a whole bunch of people, like out in Coweta, Oklahoma, where I just was. Every mini mart or a convenience store you go by has a big giant sign, we take EBT. the electronic cards, the food stamps cards. And one of my favorite stats, but it's also one of the saddest stats. Do you know when the largest percentage of Walmart sales occur? Actually, it just happened about 8 hours ago. From 12 midnight to 1 o'clock on the first day of the month, they get 10% of their revenue for the month.
Oh, man.
Because people get their card reloaded at midnight on the 30th or 31st, and they go shopping and they're there. And as soon as that card gets reloaded, because they ran out of money halfway through the month, and they load up the car with baby formula and diapers and food, and they check out, and they get 10% of all of their revenue. That's a scary stat.
Meanwhile, the anticipated $2.4 billion in new inflows is just one of VanEck's predictions for Bitcoin and crypto in 2024. According to the asset management firm, Bitcoin is poised to achieve a new all-time high in Q4 of 2024, potentially driven by political events and regulatory shifts following the November 2024 U.S. presidential election. VanEck also asserts that Ethereum is unlikely to surpass Bitcoin in 2024 but will still outperform major tech stocks. A social media post on the platform X suggests that, similar to past cycles, Bitcoin will lead the market rally, with value subsequently flowing into smaller tokens post-halving. Ethereum, according to VanEck, is expected to outperform Bitcoin after the halving, but a complete flippening is not anticipated. Additionally, the firm predicts that Ethereum's market share will face challenges from other smart contract platforms like Solana, which VanEck believes has a more certain scalability roadmap. Addressing the U.S. economy, the firm foresees the arrival of a long-awaited recession that could drive investors toward Bitcoin and other crypto assets. What are your thoughts on Yusko and VanEck's predictions for Bitcoin and the overall digital asset space? Do you agree with the projection that Bitcoin will reach new all-time highs in 2024 or 2025? Please share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.